Arcs, and today we're going to talk about market structure and how you read the market, how you understand the structure of the market, and from the highest time frame to the lowest time frame. So, first thing first you do is you're looking on the weekly time frame, and on the weekly time frame you're going to looking for the most recently breakout structure. So as you can see, the most recently breakout structure was this one. So based on this line already on this breakout structure, I consider that market are bearish and it is just are on the retracement. So you have a preview section here, a preview level there as well. They're going to show you how you see them. So you see on this time it was the previous breakout structure was this one as well, and after the market break this structure, come to retest, respect the level, create a new low. So it are on the retest. So you don't know when the market will end the retest. So basically the market runs like this. So in this case, yeah, bearish like this. As soon as the market breaks a low, you always expect the market start the retracement, but you don't know if the market gonna respect this one and drop, or it's gonna be respect this one and drop, or it's gonna be respect this one and drop, or it just continues. So you're not trying to guess, you look at the market and see. So that's where the high time frame have to be aligned with the lower time frame. Other than that, so if you don't do that way, it should be, I believe it's gonna be hard for you to understand the market structure, because everything is based on the market structure. You don't take any decision without the market structure. So as you can see, you have the most recently breakout structure there. So let's put this quite bigger. Everyone can see. Normally I like to write like the main breakout structure. Let's put like main. Maybe yes, perfect. Break market structure, perfect. That's the main breakout structure. So awesome. That's whatever. That's the only thing I want to see on this right now on the weekly time frame. Now I go to the daily, and on the daily need to look what's going on, which level the market being respect, what the market's been doing. Just looking for levels, because you need to have a reason why the market taps there and rejects, or why the market just start pushing higher now, why the market start dropping. You need to understand that why that happens. That's the most important. You need to understand why that happened, because if you don't know, just stop it. So, and based on this level, you can see the market have a nice support and resistance level here. So as you can see, some people call breakers, some people call whatever you like, guys. Don't worry about it, the names. But you can see the market didn't respect this level. You can see here the market just left some liquidity to take it out. The market just swept them, taps into the level, give a nice reaction, then drops and break the level. Great. So now the market try and already been respecting test this level. So you can see the last retest has been taken out. Great as well. So now the market drops, no breakout structure happens, nothing there. So you don't want to know, at least for now, what happened on the daily. You just need to see the levels the market has been trying to retest, or the levels that the market been react from. So now you can go to the 4-hour and see what's going on. On the 4-hour time frame, you can see the market being taps into them, respect this level, swept this liquidity there, also this one as well. You can see like a flag, a bullish flag. The market follow the bullish flag, taps into this support level or resistance level, whatever you want to call it. Taps there, give a nice rejection, and a nice rejection from this level, nice move, and swept the target. So if you play bullish or bearish flag, congratulations, you have a TP reaction. So now, as you see, the market swept this level. It doesn't break any structure yet. So on the high time frame, you don't have any confirmation yet on the 4-hour. So you know you are bearish. So you need to see a bearish, because the idea is, so you check. Let's see, for example, on the bullish market, you check on the weekly time frame, and you have your main breakout structure here as a bearish, as a bullish market. Perfect. Now you drop your time frame. You need to see, okay, the market's gonna start the retracement. Now you need to see the daily, for example. Again, create another breakout structure in the same direction. Now you go to the lower time frame and you're gonna see on the lower time frame, let's see, 4 hour or 1 hour, whatever you like. You're gonna see the market on the retracement and break again. So you have weekly, daily, and 1 hour or 4 hour, the same breakout structure, the same direction. So you have three time frames in the same direction. So you already know your bias and you know what you should do. So to trade it, don't go against them because the three are together in the same direction. So if you go to the 1 hour, on the 1 hour, you can see, yeah, have a look. Great. What you can see here on the 4 hour, so you can see the market respect the level, perfect. Give a nice displacement to the downside. Trap these traders on this order block there. You're gonna talk about traps later on next video or something. So trap these traders from this order block, keep dropping, and that's the important. That's the important. So these boxes are Asia sessions. So just for you to know, because to trade, for me to trade on London, I need to see what Asia session's been doing. So, and this is happens exactly how happens above. So you can see the market swept this liquidity just there, and break structure to the downside just there. So that means the market are on the 1 hour are aligned with the weekly time frame. So you have higher time frame and the medium time frame in the same direction, so bearish. So and then you wait for, as soon as the market breaks structure, you wait for the market retrace, and that retrace should build some liquidity, so you are able to swap the liquidity and trade in the same direction of the market. So, and you can see you have this level here, you have this level here, and if you drop like that, you're gonna see like a flag or a liquidity, whatever you want to call, and you see that amazing liquidity build equal internal range liquidity because they are inside the range. Then you have this rejection block there. It doesn't tap, but you consider it as a tap because it's less than a pip, so the spread doesn't want to go there, but it's counting as entry model, because from this entry model you can get in here around these levels and you can target Asian low or at least 1 to 2 or 1 to 3, whatever your risk it is. So but now you have another confirmation. So if you're going to look at this, so what confirmation you have next? So you see the market swap that liquidity and break structure again to the downside. So you have another break of structure. So another alignment with the high time frame. So you have the weekly time frame bearish, you have the 1 hour bearish, and now another confirmation on the 1 hour bearish. You are on the retracement. New York is gonna open soon, so you have some volatility on the market. So you wait for the confirmation. So you go to the 50 minutes, and what you want to see to get your entry, you want to see exactly the same. You want to see the market break structure to the downside again. So you expect something like the market push and confirm you, then you are on the weekly, on the 1 hour and the 50 minutes in bearish. So in the bearish market, so you have all the directions show you, you have all the time frames show you the direction. So you should avoid that question. So what the market is, bearish or bullish, because you already know the market is bearish. So and as soon as that happens, that's what you're gonna looking for your entries. So this is how we read the market structure, guys. Is not the perfect way, is not the best way, it's just the way I did, the way I look at it, the way I know how to read that market structure. So that's it. Thank you for watching and see you in the next video.